So it's Friday, the 22nd of April, and this isn't quite accurate. For the day, I went down about 70,000. So I took a big hit this week. Also, this isn't accurate either. We're down around 50,000 from last week. For the year, we're up just under 413,000 Swedish crowns. So that's come down a bit from last week's ending number of about 464,000. So year to date, we've come back down to around 22.6%. So on Friday, the broad markets gave up a lot of ground, and this came off the back of the news that the Federal Reserve were hinting that they were going to lift interest rates aggressively in the next meeting in May. So you see my portfolio come down 4% for the week, and compared to the S&P 500, that's only come down 2.6%. So my portfolio has actually fared a lot worse this week. If we zoom out to the different time frames for the monthly, the quarterly, and the trailing year, we're still up convincingly as compared to the broad markets. So the 413,000 Swedish crowns equates to around about 39,000 euro at the current exchange, or you're looking at around 42,500 US dollars. This article here states that the Cleveland Fed President Loretta Mester said she's in favour of raising interest rates by 50 basis points, perhaps multiple times over the year. She also says that she's in favour of raising rates quickly to bring down inflation. So of course any talks on interest rate hikes spooks investors, and immediately what resulted was a spiral downwards. I don't pay too much attention as I understand we're going into a tightening cycle and the measures taken are necessary to bring down inflation. The thing you got to remember is that more often than not, the news is often dramatized, magnified, and the resulting reaction is panic and overreaction. And this is simply because we have stronger responses to things that are negative. Stepping away from the doom and gloom, I want to point something out real quick. If we click on ExxonMobil, we see that for the year we're up 48.21%, and of that, 1.45% is from dividends and 46.76% is from capital appreciation, price appreciation. You might think to yourself, how is that possible when ExxonMobil year to date is only up 33.98%? Also, there's a fair bit of difference between 33.98% and 46.76%. Many times in my prior videos I've alluded to the fact that the SEK-US dollar currency pair relationship plays a big part in the outperformance of my portfolio. So you see this again with Chevron Corp. For the year it's up 45.91%. Of that, 1.38% is from dividends and 44.53% from capital appreciation. But if you look again at the chart for Chevron, for the year it's only up 34.96%. And again, the reason for this outperformance is the Swedish crown US dollar relationship. We see that from the start of the year it's gone up. The US dollar's gone up 5.8%. Looking at the underperforming stocks, this will give you a better picture of what's going on. I want to point out Gilead Sciences. For the year, it's down 9.65%. Now, dividend payment of around 2% has cushioned that a little bit. Now, this will perfectly illustrate it, because unlike the other two stocks, I haven't actually added or bought any more stocks in Gilead Sciences. And this will make the comparison a lot better. For the year, if we look at the chart, Gilead Sciences is down 14.23%. And the difference between this negative 14% and my performance of negative 9% is the 5% difference that the US dollar has risen against the Swedish crown this year. Now the numbers aren't exactly going to line up, and that's because my brokerage account will exchange at a different rate than the rate that I'm showing you now. In fact, if we look from when the US dollar bottomed out against the Swedish crown, that was around the 1st of January 2021, and since then it's been on a rise north to the tune of around 18%. This means that this 18% rise in the US dollar both amplifies and cushions both the stocks performing and underperforming. Around January of 2021, I made a strategic decision to start piling money into the US equity markets. And I did this for reasons that I'll explain later on. So ExxonMobil is just an example of one of many stocks that around the start of January 2021, I start piling a lot of money into. The big bet that I made was that the dollar was going to rise, and this would benefit me in many ways. The primary use of this advantage was in dividends. If you look at the yield on cost, which is YOC percentage, you see that ExxonMobil now pays 8.22% yield on cost. So Investopedia says that yield on cost is a measure of dividends yield calculated by dividing a stock's current dividend by the price initially paid for that stock. All of that means is how much am I getting, what yield am I getting for the price that I paid for? And we obviously want that yield to go up over time. And when I started building positions in ExxonMobil, it was paying 6.07%. So you ask yourself, well, how did you raise your dividends from 6.07 starting to what you've got it now at 8.22? The immediate answer that comes to mind is, well, the company raised the dividends. And yes, they did raise the dividend, but they raised it by 1 cent. From March of 2021 to March of 2022, they raised the dividend from 87 cents to 88 cents per share. The main reason why the yield on cost has risen for me is because of the Swedish crown US dollar currency pair relationship. Having a look at all the other holdings, some of the holdings that I have, you see that the yield on cost has shot up compared to the current dividend yield. And it's shot up faster than what any dividend hikes that the company gives to its shareholders. Not only is it a dividend, but the 18% rise of the US dollar against the SEK also compounds what capital appreciation that Exxon has experienced in that time. In this case, Exxon over that time has gone up 106%. Now you're probably saying to yourself, yeah, cool, whatever, you're boring me with the minutiae. Tell me how you figured out that the US dollar was going to rise against the SEK. And I got there using GDP, which is basically the goods and services that a country produces. Comparatively, as an economy, Sweden is far too small. It produces $537 billion of GDP compared to the US's 21 trillion in GDP. Yes, granted, the population of the US is 332 million, shadows Sweden's population of 10.5 million people. But dividing the population number into the GDP number, you're going to get a GDP per capita. All that means is how productive each person is in contributing to the national GDP. Comparatively, each person in Sweden produces just under 52,000 US dollars, whilst the US constituent produces $63,500. Yeah, so how is this important? Well, it shows that the US economy is not only bigger, but it has more productive people. Reading from this Investopedia article, it says that changes in the GDP reveal changes in economic growth and can directly impact the relative value of a country's currency. Further, a high GDP reflects larger production rates, an indication of greater demand for a country's products. An increase in demand for a country's goods and services often translates into increased demand for the country's currency. Tying it all together, unless the GDP and or the production rate in the US economy falls drastically, or the inverse occurs and the Swedish economy rises drastically, the same relationship is going to continue going forward. In fact, the long-term trend of the US dollar shows this. If this dynamic continues, then the yield on cost of all these positions that I've bought is only going to get larger. In theory, I've engineered my own dividend raises, and I won't have to wait for the yearly organic dividend raises that the company gives. Historically, companies raise their dividends by around 6% per year. Effectively, I'm going to get that dividend, and it's going to be compounded by the exchange rate difference between the US dollar and the Swedish crown. This will also amplify any profitable positions and cushion any positions that are underperforming. One further thing, this also makes those companies that pay a lower dividend like Microsoft or Apple much more appealing to get into. Although the starting yield may not be very lucrative at first, if you extrapolate out and these dynamics continue, then it could very well become very lucrative. Saying all this so that you don't get confused with all the doom and gloom and look through all the noise and find opportunities. Because when everyone else is fearful, that's when the best opportunities arise. Right, so I think I'm done for the week. I think it's time to go and lay by the pool, get some rays, grab a few beers. I'll leave you with this quote I read the other day. One does not have to be smart to make a fortune in the stock markets. All he has to know and do is what it takes.